Right, we'll get straight into it. Session 3 begins with a keynote address from Don Inglis from Canaccord here in Perth. And I have to tell you that Don has actually been, I think, to every single Resources Rising Stars conference from the outset. He's taken the trouble to head over to the Gold Coast since the event began. He's spoken over there. He's well known to many of the audience in the Gold Coast, and of course he's extremely well known here in Perth. He's one of Perth's most experienced brokers. He's been with Canaccord for a number of years here, 25-year career with Saw James Capel, HSB Securities, amongst others. He's got an incredible depth of knowledge of the resources sector, and he's actually going to talk to us today about one of the areas of the market that's been particularly interesting in recent times, and that's the rare earths market. So it gives me great pleasure to ask Don to come to the podium and have a chat. Thanks very much.
Thanks, Nicholas. You're very kind. Warm welcome to everybody, and particularly our friends in Queensland. Wish I was there with you, but I think the last time I was there I talked a little bit about obfuscation, that great word that means to confuse and obscure, and we've got plenty of that in the finance sector. I think I talked a little bit about also the changing language of the industry. You know, there was a time, it wasn't that long ago, when companies used to get up here and they'd start with a mission statement, you might remember, as if they were going to Mars or something. And then that was followed up by motherhood statements. And now we've got disclaimers, you know, and disclaimers, you know, disclaimers have got the stage now where they're like oxygen and sex. You don't miss them unless you're not getting any. And acronyms are abound in our industry. I mean, we've had the GFC, Global Financial Crisis, we've had CDOs, Collateral Debt Obligations, we've had CFDs, Contracts for Difference, and now we're big on LICs, Listed Investment Companies, and ETFs, Exchange Traded Funds. And I mean, you can have long funds, short funds, long and short funds, you can have leverage funds, you can have synthetic funds. And synthetic funds, as I may have mentioned, do concern me because what's on the wrapper is not necessarily what's in the can. And that sort of brings me to the novice, if you like, investor coming into the resource sector. It's not that easy either. I mean, you're looking at companies that are doing greenfields and brownfields exploration. When they put a hole in the ground, it might be RAB drilling, which is rotary air blast. It might be reverse circulation, it's RC. It might be diamond drilling. Now, they all cost different amount of money. They go to different depths and they produce different results. But it's a little confusing. And once they've got into the mineralization, then they could have an inferred resource. They could have an indicated resource. It could be measured. It could be contingent. It could even be prospective. And of course, all of them have to qualify as a JORC resource. JORC resource, Joint Ore Reserve Committee. I mean, who are those guys? All right. Those guys are put together by the mining industry and professional organizations and are full of competent persons, we hope, who then go on to give the resource statements that we look at in every presentation at every time. Now, we've got into the mineralizations, all looking pretty good, so we move to reserves. Now, we hope they're all proven reserves, but there could be possible reserves, could be probable reserves. Possible, probable, sounds like a rugby trial, doesn't it? And then we go to studies. We've got scoping studies, preliminary studies, we've got DFS, definitive studies, and we've got bankable feasibility studies. So it's a little bit of a minefield, if you like, for somebody coming in. And if anybody wants to know the meaning of all these terms, then come and talk to the good people at Canaccord. And it moves me to obfuscation, and we'll move on to rare earths, because rare earths, strangely enough, aren't rare at all. They're abundant. What is rare is sufficient economic quantities of rare earths. And when you see a rare earth intercept, which was put together here by a company that I presented yesterday, RareX, they have been able to come up with some fairly spectacular drill results. And one of them, if you look at the chart, is 29 meters at 5.2% TREO. So what's TREO? Well, it's total rare earth oxide. But what's not told, of course, is what is actually made up of inside that total rare earth oxide. And this is where it gets fairly interesting with regard to rare earths. Now, rare earths, according to Geoscience Australia, which is a government body, the rare earth elements have unique catalytic, metallurgical, nuclear, electrical, magnetic, and luminescent properties. Their strategic importance is indicated by their use in emerging and diverse technologies that are becoming increasingly more important in today's society. And over the past 2 decades, they go on to say, the global demand for rare earth elements has increased significantly in line with their expansion into higher-end technological, environmental, and economic environments. So here they are, recognized rare earth elements. There's in fact 17 of them. Well, actually, there's really only 15 of them because they refer to the lanthanides as those rare earths which occur on the periodic table beyond number 57. But because scandium and yttrium are so similar, they've all been lumped in together, and consequently, you've got the 17, if you like, rare earth elements. Now, differing rare earth distributions makes benchmarking fairly difficult because it all depends on the economic value of the separate size of the rare earth elements in the total resource. But also, you've got to look at the share of the higher valued rare earth elements in the total resource. So from lanthanum down to promethium, you've got what are deemed the low rare earth elements, and thereafter, funnily enough, the high rare earth elements. And of course, these all have different prices and different demands going forward. Now, it was touched on yesterday. I will come back to this slide. But why are they important? What are they used for at the moment? Okay, well, this slide is taken from Lynas Corporation, our rare earth producer. And as we know, they're used in electric vehicles involving components and hybrid technology. Benefit being they provide lighter and more efficient high-performance motors. Naturally, they're used in green technologies, particularly catalytic converters, particularly with regard to wind turbines. And obviously, they're making vehicle emissions cleaner and wind turbines lighter. And in this world, as we move towards a cleaner, greener environment, that's what we're going to see more of. In consumer electronics, it includes smartphones and computer components, which provide smaller, lighter, cheaper, and more efficient consumer devices. And then in robotics, appliances, and medical devices, then you've got drones and household appliances, medical diagnostic equipment, but also heavy use in the military field, fields with regard to weapons. Can I go back to the previous slide? Yes, I can. So when you get a figure that was put out with the total rare earth oxide, bear in mind that, companies can use different cutoff grades. And also, you've got to bear in mind with rare earths that some of these deposits can also include other minerals, such as uranium and thorium, which may, of course, have environmental complications. Comparisons of rare earth products based on total rare earth oxide and high rare earth elements is slightly misleading because some of the light REOs are low value, but some are high and of high demand growth. For example, neodymium and praseodymium. Whereas some of the higher rare earth oxides are high value, but many are low. For example, gadolinium is low, and some of these things are produced in such small quantities to special order, they don't actually have a regular market price. And one has to be aware of that as well. So probably when you look at the whole thing, a metal equivalent grade is probably a better metric to be made between these multi-commodity deposits. But what I will tell you is that I've discovered that the big five rare earth oxides contribute to more than 50% of rare earth project revenues around the world. And they are praseodymium, neodymium, europremium, terbium, and dysprosium. I think I pronounced that all correctly, but bear in mind they all end in IUM. In more detail, if this is made available to you, this is taken from Byron Capital, which is an organisation in the UK. It'll actually break down for you which rare earth element and how it's used in industry. I won't go through it all, but it's there for you guys. I'm sure the team outside can provide that. So look, what's the big deal? The big deal occurred on October the 1st of this year, not so long ago, where Alan Lord, who was Under Secretary of Defence for Acquisition and Sustainment, made a testimony to the Senate Armed Services Subcommittee, and it reads like this: a US rare earth mineral strategy should consist of national stockpiles of certain rare earth elements, re-establishing rare earth mineral processing in the US by implementing new incentives and removing disincentives with research and development around new forms of clean rare earth mineral processing and substitutes. We will need your help, she says. So, of course, a day later, the Trump administration came out with an executive order and declared a strong America cannot be dependent on imports from foreign adversaries for the critical minerals that are increasingly necessary to maintain our economic and military strength into the 21st century. Now, bear in mind that, according to reports, China provides 70 to 80% of the world's rare earth production, depending on the source. Depending on the source, they've got something like a third of the total the world's rare earths as we know it. And once upon a time, apparently, Deng Xiaoping said, rare earths to China is like petroleum to the OPEC countries. Now, the big issue was that there was threats of an embargo not that long ago, which changed the attitude of everybody in the US, certainly in Japan, and probably all around the world. And people are looking to try and establish a supply chain outside of China, which of course brings us back to Australia. And it's all good for us as companies are looking to do this. Here are some of our rare earth element companies. I mean, the standout, obviously, is Lynas Corporation. They're in production. They had some issues in Malaysia, you might recall. Malaysia was complaining about the radioactive component of the Mount Weld ores, and it looked at that stage as if Wesfarmers was going to pick up Lynas, you may recall. But then it changed with the threat of a Chinese embargo. The Japanese get 30% of their rare earths from Lynas. I think the phone call was probably made not just by the Japanese, but probably by the Americans as well. And suddenly, the Lynas price went ballistic. The Wesfarmers deal was off. We at Canaccord helped Lynas raise $400 million, and that's being used to build a processing plant in Kalgoorlie. That was announced last year. And this year, they've signed up a deal with the US Department of Defense to assist in building a facility in the US. So obviously the standout is Lynas. They're in production, and it focuses more attention on Australia and our deposits here. There was for some considerable time belief that Northern Minerals, NTU, with the Browns Range dysprosium deposit, they were producing dysprosium through a pilot plant, but alas, that has not been sufficiently economic enough. They're drilling to increase the size of the resource to try and make a commercial viable proposition. But of course, there's a lot of Chinese investors appeared on that register, and I think they're not there to see the share price go up. They're there to see put their hands on the asset, which has happened to a number of companies before. You've got companies operating in Greenland. You've got Hastings have got the Yangibana Upper Gascoyne property. Arafura has got Nolan's neodymium and praseodymium deposit in Northern Territory. The two that interest me would be probably RRS that you heard from yesterday, because that's in WA, and also that's going to get a side benefit from what Lynas is going to build in Kalgoorlie. And the other one that interests me is Vital Metals, which is a small listed company here who's just done a deal with the Saskatchewan government in Canada to put together the first processing and separating facility in Canada. So there's a lot going on, but it's very, very political. And at the moment, you can see it's imperative that we get a non-Chinese rare earth production chain happening. This will assist all interested parties in Australia. The Biden victory, without a shadow of a doubt, much has been written this week already about the move towards rejoining the Paris Accord and a move towards greater electrical vehicle use, greater renewable energy use. This is all going to be positive for the rare earths market. But you've got to pick your spots carefully because, you know, as I said earlier, rare earth element prices can vary. And like with every other mining stock, everything depends on the price of the underlying commodity. But certainly I think there's going to be more and more interest in this space. Certainly it was a space that I didn't know too much about. But I'm finding it more and more intriguing, both on a geopolitical front as well as finding out about what elements are within the total rare earth oxides that companies are now producing. So look, pick your spots, because it isn't easy. And what you don't want to occur is be the retired couple heading towards the accountant who tells you that it's time to figure out who'll be wearing the mask and who'll be driving the getaway car. Ladies and gentlemen, thanks very much for your time. And Nick's now going to come up with the next speaker. Thank you very much.
Don, before you go, we did get a couple of questions. I think you probably answered the first one, but if you just want to... The question was, what are your best picks in the junior rare earth sector? I think you did cover that, but you might just want to quickly...
Oh, look, I would say without a doubt, you have to be, if you're serious about it, you have to be in Lynas. If you're not so serious about it, but think there's plenty of upside, then I would look at RRS. I think they're trading around 11, and Vital Metals is trading around 3.5 cents. They'd be my choices.
Excellent. And the other one wasn't a rare earth question at all. It was, do you believe that the current pullback in gold is a buying opportunity?
Yes, I do. I actually bought some gold stocks yesterday. If you want to know what they were, it was Saracen. I think that the gold price, as I've said before to you guys in the Gold Coast, it's going to be here for a while in this low interest environment. That's not going to change in a hurry.
Excellent. Thanks very much to Don.